So next up to present is another returning company to the Australia Investment Day, and we're pleased to have them back. D3 Energy trades on the ASX under the symbol D3E and cross-trades their shares on the OTCQX market under the symbol DNRGF. We're excited to welcome back to the program David Casey, Managing Director and CEO.
Thanks very much. Thank you. First of all, I kick off by thanking all of you here in person and those of you online. I'd like to thank Stephen and David for the invite again here this year. I'll probably kick off with the same theme that seems to be part of the conference and everybody's telling you where they've come from. So I'm Sydney based, but I didn't come from Sydney. I came from Cape Town in South Africa. A few hiccups along the way, fire at Cape Town Airport as I'm heading to the airport and 9 hours of delays. Turns out, probably fortunately worked out for me because I missed my flight, but I missed a flight that was cancelled anyway because of weather. And so I ended up getting in here about 4 o'clock, 5 o'clock last night. So who is D3 Energy? Looking at the board or the management level, and I talk to this more about this in perspective to our assets in South Africa and to a lesser extent South Australia, but South Australia is something I'll talk to. Everyone on the board's got a proven track record of building businesses from small micro caps. For instance, Eastern Star, we were acquired by Santos. We grew that from about 26 million to being acquired for around $1 billion. Warrego Hancock Prospecting, the same thing, and Talon and Strike, the same thing. Small value propositions, but what they all have is massive or material upside. And that's what we see here as well in South Africa in the first instance, but even more so, I suppose, in South Australia. They all had technical challenges. Sometimes you just need technology to catch up with your challenges. Sometimes you need to be clever. Sometimes you just need to be lucky. South Africa is a different proposition. It's a perception challenge. There is no technical challenge, and I hope you'll get a sense of that when I finish the presentation. There are no specific logistical challenges for us. The gas is there. We can get it out. We've proven that. It's the perception around the fact that this is in South Africa, and hopefully I can convince you that's also not an issue. Looking at the company level, capped at around 48 million today, primarily held by board management and supporting shareholders. We haven't been listed on the ASX for 2 years yet. We listed in May 24 on the OTCQX boards in November 24. We are, and if there's one thing I've taken out of the conference already is I don't want to be in the rare earths business because I can't pronounce any of those names. We're in the simple helium, natural gas or methane and hydrogen business. And we're in 2 jurisdictions, South Australia and South Africa. Is there anybody here that was here last year? Well, that's where we were this time last year. We were about 4 cents, 4.5 cents. Today, well, actually yesterday on the ASX, we closed at 37 and we're about 30 cents on the OTC. It's a function of delivering on milestones, delivering on work programs. We've got a fantastic world-class resource and we've continued to confirm that with additional drilling and additional testing. Concentrations are up to 7% helium. For context, there are projects around the world that are very commercial at 1%. We achieved our maiden reserve certification. Bearing in mind, we've only been listed for close to 18, 19, 20 months. And we managed to book a massive contingent resource, which I'll talk to, but at the same time, a maiden reserve, which translated in us being able to apply for our initial production right application to become a producer. The process in South Africa is the process that you see anywhere else. You've got to go through doing the work. And there's no circumventing any processes in South Africa. It's as you would anywhere else. You've got to do the work. You've got to book the reserves. You've got to establish commerciality to get the production right application. We did that. And we actually lodged that in September. So we lodged that almost 15 months after we were listed on the ASX. At the same time, we've acquired another asset in South Australia, which I'll talk to, which is massive. It's almost 1.5 million acres. A lot of this share appreciation is a function of better engagement with the US market. you've got to earn that right. And it's a function of, and you look at where we were, we listed at 20 cents, we got down to 4.5 to 5. It's a function of maybe we didn't even overpromise. Maybe we took away a lot of our thunder because we listed with a massive contingent 2C resource, certified, independent certified resource. You could argue maybe the only way was down initially until we started to deliver on those milestones. And you can see technically we have, but importantly, we engaged with the US market. We started to the OTC. Believe it or not, the OTC started to drive some of the appreciation on the ASX. ASX then developed a little bit of FOMO, and then we've got one market driving the other at various times. We've also acquired new TCPs, and we've converted those TCPs into ERs. We've expanded our portfolio throughout all that time. So what is helium? I'm not teaching you to suck eggs here. I'm a scientist by background, geologist in the first instance, reservoir engineer. I knew about helium. Yep, it's number 2 on the periodic table. It's pretty inert because you can breathe it in and makes you talk funny, but doesn't do anything else. Knew it was for balloons. It's used for much more, as you'll see. But what is it? It was discovered in 1868 through the sun's spectrum. And if there's anybody that's curious out there as to why you would call a company D3 Energy, you might see the D3 because if you look at the yellow spectrum there, it's the third isochron of the sun. That's the D3 component of our name because helium is a big part of our business. Helium there's no calorific value in helium, there's no energy. The energy part is the fact that our associated gas, as you'll see, is natural gas or methane. The point of this slide is to show you that there's only one process. Well, with the exception of a nuclear blast, which will create strontium, which will create other things, but the only thing that creates helium in the world is radioactive decay of uranium. Uranium is the second most abundant element in the universe. It's one of the rarest on Earth. What's it used for? Well, just about everything that we use in 21st century society. That pie graph's a bit out of date. US, the biggest consumer of helium in the US was GE, and that was primarily for MRI machines. That's changing. They're coming out with more efficient ways to cool. Helium is very expensive. They have developed other technologies, but that's being replaced by semiconductors. We've all got one. It needs semiconductors. But just about anything that we touch in society today, your cars, everything needs a semiconductor. You need helium in the manufacturing process. And that's why you've seen helium go from $70 an MCF 20 years ago to upwards of $1,000. It's back to around $400 to $500 per MCF. And that's why we're chasing helium. It's hard. It's a difficult molecule. It's, as I said, the second smallest molecule on the planet. It's hard to trap. It's hard to produce. But it's worth the effort because it's 50 to 100 times more valuable for the same unit equivalent volume as natural gas or methane. So looking at South African assets, there's a lot on this slide. This is unique. I've been doing this, I said 30 earlier on to somebody, I've actually been doing this for over 35 years. I've never seen an asset or a project or a reservoir system like this anywhere else in the world. Hopefully you'll believe me, but I don't expect you to, because I didn't believe this when I was told this is what we were dealing with. I had to find it, we had to live and breathe it. What you've essentially got, and it's a massive portfolio. I said we had 1.5 million acres in South Australia. We have about 500,000 acres. Massive portfolio. All of the areas you see on the map on the right there, that is our tenement position. The gold area is our maiden production rate application. And what you've got is essentially you've got a unique event, 2 billion years in the making. We had a meteor impact, the world's largest meteor impact 2 billion years ago. There was no mass extinction event. There was nothing to extinct, just a pile of rock. But what it did do was concentrate all of the uranium in this specific area of South Africa. And that's our source for the helium. You've got this massive concentration of uranium. We also have biogenic methane. Most methane around the world is thermogenic. It's created by temperature and pressure and cracking of organic material. The methane here is biogenic. So because you've got this deep-seated source of uranium, this uranium super kitchen generating all this helium, You've got also, at the same time, this deep-seated source of bacteria, just like your rubbish tip. One big difference, bacteria here is billions of years old, your rubbish tip's a couple of months old. But you've got this continual regenerating system. There are no real, with the exception of biogenic methane in rubbish tips, there is no regenerating reservoir system anywhere else in the world. And what makes this special is you've got this source, or super kitchen for want of a better word, and you've got these massive fault systems that are the conduits that have tapped into the source rocks at depth, and you've got the helium and the methane flowing up these massive fracture systems to the surface where we capture them, and we capture them very cheaply, as you'll see. Looking at this in more detail, I mentioned those massive fault systems. This is just one, the Virginia fault. The red stars there represent boreholes, not necessarily wells. Some of these RBD03 and RBD01 were drilled 40 years ago for gold exploration. This is, well, in its day, was one of the largest gold provinces in the world. It's 4,000, in excess of 4,000 boreholes that have been drilled here. Some of those, like RBD01 and RBD03 on the bottom of that page, have been doing it, according to the farmers, since they were drilled, as in flowing gas, helium in this case, and methane to the surface since then. My technical team would hate me to say this, and we're getting recorded, so it's probably too late now. Some of our best exploration tools are our farmers, because they know where the boreholes are. Farmers know where everything is on their property, and they're the ones guiding us to where these legacy gold exploration boreholes are. Fantastic anecdotal evidence, as hopefully you'll see on the next page, that turns into factual evidence, and evidence that's given us the confidence to say that, and I've said this many often, and I think unique is often used. I think people throw unique around because it's an easy terminology. This is, hopefully you'll get a sense, a very, very unique reservoir system. Bearing in mind, so RBD03 is in the middle, RBD01. We've drilled our own wells and they flow gas to the surface. You get helium concentrations of, as you see here, 4.7 to 6.2. We've actually got one more recently of 7.4%. The thing is, they're very cheap to drill. Can't get cheaper than if they've already been drilled. And all you've got to do is capture the gas. But they're very simple, which translates to one of the cheapest per well projects for helium, and also in this case, methane or natural gas, anywhere else in the world. I'm trying to keep this slide simple. Remember RBD03. I use this as context as this was drilled 40 years ago. It has been flowing according to the farmers since then. And I can attest to the fact that when we went up, we identified this borehole, it was still flowing. We used our own kit that we designed, had built in Australia and shipped to South Africa, and we tested that well. We tested that well in August of 2004. You can see the flow rate there. It's started a bit over 150, and this is 1,000 cubic feet per day to a bit under. The reason why they peak and they decline slowly is because we shut them in when they've never been shut in before. They will go asymptotic, and then they won't decline anymore. The takeaway from this is we then went back and tested that borehole that had been flowing for 40 years. We tested it, shut it in for a year, retested it. The rate went up, and it went up by almost 40%. I have no doubt if I go back and retest that this year, the rate will go up. Because what you've got is a ubiquitous, massive recharge system that's refilling all of these old boreholes, refilling all the wells that we will drill and will drill going forward. There will be a point where you reach equilibrium. But we know there's hundreds and maybe thousands of wells that have been drilled here that may be flowing gas today, and you still see this sort of response. And we've seen it in 2 wells. Yes, we may reach an equilibrium point at some point, but we're not seeing it today. And we've got wells and boreholes that we've tested that are flat today. And our neighbour next door, a company called Renogen, who have a plant and who are producing helium and natural gas, they see exactly the same thing. I mentioned our maiden reserve certification. Once again, not an insignificant achievement in the space of a little over 12 months. The numbers from a contingent resource, a 2C contingent resource, are massive in their own right. You've got methane, recoverable methane resource of almost half a TCF, half a trillion cubic feet of gas. You take 3C into account, you're over a T. The reserves, by comparison, are modest, but they're modest because they're less than 1% of the total permit area. To put that in context, helium, and the reason why we're chasing it, because you do get massive prices for helium. So helium at the moment, let's say it's $400 US an MCF. Let's say natural gas in, I'm not saying, natural gas in South Africa is around $10 per MCF. So let's assume $5, and this is a 2C resource basis. Let's say $5 for recoverable methane. Let's say $100 for the helium. Two of them are about $2.5 billion worth of potential value just there for the 2C. The resource is massive, the upside is massive. A lot on this slide. The takeaway here is, and I've mentioned it a few times, because these are simple, and if you look at the top right there, that's a very simple, that's our metering skid. That's how we test the wells. It doesn't get simpler than that, except in a development scenario, it would. That's on the surface so we can measure it. In a development scenario, that'll be below the ground because they're low pressure, because there's no downhole equipment. There's no water produced. We don't have to go back into them because we know there are boreholes that were drilled 40 years ago that are still flowing gas, and some of them with obstructions in them. When we tested one of them, we recovered a Coke bottle and about 1,000 cigarette butts, and yet they still flow gas. So we know we're not going to have to go back in and work these over. So I don't even have to put a steel grate on these things. 3 feet below the surface, and I'm not even going to call it a wellhead. It's a manifold with a valve welded on top. You take it back, it's all low pressure, take it back to your processing facilities, separate the helium and the methane in your cell, both separately. It doesn't get simpler, and as a consequence, it doesn't get cheaper. And literally, the wells pay off in months, not years. Look at South Australia. So South Africa is unique. With the exception of our peers next door, there's nothing else I've seen anywhere in the world that shows the same reservoir characteristics. This in South Australia is probably, and it's, once again, is there anything conventional about helium? I don't know, but if there is, this is it. This is conventional helium. You need a source, you need a reservoir, you need a seal, as you do in any other conventional hydrocarbon project. Here, well, we're pretty comfortable with the source because we've got Olympic Dam, the world's largest uranium mine in the world. Pretty comfortable that there's a resource. But is there a resource for hydrogen? Don't know. We've got mapped basement faults. Basement faults are required for serpentinization, which creates hydrogen. Maybe hydrogen. Reservoir. We know the heavy tree sandstone is in the area that we're targeting. We're targeting the Ark-Ringer Basin, PL 121 and 122. Massive footprint, as I said. So we know we've got a fantastic reservoir. We're assuming, and this is BCF of potential as well, billion cubic feet of potential here. We assume 15, but there are areas in the analogous Amadeus Basin, which I'll talk to, that has 200 metres of reservoir. So we're pretty happy about that. Do we have a seal? Well, obviously this is the world's second smallest molecule. It's very hard to trap. You can put it in a steel container. It will get out eventually. There is nothing that will hold helium over the course of time. So you need something that's pretty good to slow it down as much as possible. We've got, in this area, the best seal in the world for any hydrocarbons or helium is evaporites or salt. And we've mapped the Todian evaporite, which is a salt system, across all of the Ark-Ringer Basin. Importantly, in all of this area of Australia, and it's a massive area, there's only 2 wells. And in the Ark-Ringer Basin, no well has drilled sub-salt. The 2 wells that have drilled sub-salt in the analogous adjacent Amadeus Basin are Mount Kitty 1 and Magee 1. And both recovered helium to the surface. Both flowed helium to the surface. One flowed helium and hydrogen to the surface. And when I say flowed, at pretty good percentages. Mount Kitty flowed at 9% helium, 11% hydrogen. Gaseous helium, gaseous hydrogen to the surface. Why we like this and why we think it's drill ready, and we've reprocessed thousands of kilometres of seismic, and you can see the structures there are massive, and that's why it translates to BCF and TCF of potential. Why we like it? McGee-1 didn't flow hydrogen. When we look at McGee-1, we can see there's no mapped basement faults on the seismic. Mount Kitty, which has hydrogen and helium, we can see mapped basement faults. What we like about the target for us, hydrohelix, as you can see there, we have mapped basement faults. So this is not only a potential helium play, significant in its own right, but also a potential hydrogen play. The other thing we like that I don't say here, the other associated gas is methane or natural gas. In this part of Australia, you need to generate, you'll have to generate all of your electrons to power all of your facilities. Methane allows you to do that as part of your project dynamics. So, as I said, it's not just helium, it's also not just natural hydrogen. In South Australia, in South Africa, and I get my Souths right here, in South Africa, it's also a valuable commodity in its own right, and that is methane or natural gas. On any given day, there are 2 load shedding events anywhere in South Africa, and a load shedding event is a euphemism for blackout. They are power hungry. The histogram there, and I keep it here, that is a genuine gas cliff. Gas at the moment comes from Mozambique, natural gas. 2027, that gas finishes. The taps get turned off. We're not going to solve South Africa's energy problem, but we'll be able to sell every molecule of gas that we have into South Africa and the South African market. Novo I should have said Novo is our largest shareholder. Novo is our largest shareholder because they were our joint venture partner. When we listed, we acquired their stake in the asset for equity in the company. The point is, they're our obvious first market opportunity. And having access to a market, having a pathway, differentiates us from just about any other opportunity out there. So in summarising, because it's an investment conference at the end of the day. So what are the catalysts? You saw the catalysts that took us from 4 to, well, today 37. We have been as high as 60 cents. The first thing is submission of the production right application. We've done that. That's a big tick. We hope to get that granted at the end of this year, early next year. There's a prospective resource for our South Australian project, tick. We've applied for strategic infrastructure project status in South Africa. We should get that, big tick. Doesn't circumvent process, streamlines it. Potential contingent resource for 386, what I didn't say, those resource numbers are only for one of our permits. It's only for ER315, not for any of the others. We're in discussions with a potential partner for South Australia. South Australia is a deep well. And companies of our size do not drill 2.5 kilometre, 8,000 foot wells in our own right. We find a partner. And we're in discussions with a partner, and hopefully we can announce something in that regard sooner rather than later. Also, as I said, Novo. Hopefully we can announce something with Novo in the not too distant future here. You've got a potential reserve upgrade coming. And drilling at hydrohelix, all. And maybe, as I said, maybe granted the production right application by the end of the year. That's what I hope justifies resetting a new floor from 35 to a dollar plus. Thank you very much.
Great. Thanks, David. Any questions from the audience here? Give it a couple minutes. If not, we'll go to the online channels. John?
We have a question for somebody's asking if you can provide a little more color around the strategic role of Novo Energy.
Yeah, look, Novo is essentially, they're a shareholder. As I said, they were our joint venture partner. They are a shareholder. This is not the investment thematic for Novo. They're a gas retailer. They want the molecules. So they're a fantastic strategic partner in being the first off-taker for us. But we will produce more gas than Novo can take. We'll produce far more gas than quite a few of the other potential off-takers that we're talking to. About 10%.
Potential acquirer?
No, look, I think as we take the project forward, we'll obviously have to raise money to do various activities. Most of the pilot plant, the production, which is the foundation of the production rate application, that's essentially already costed. And that's funded by the likes of Standard Bank and others in South Africa that also fund the project next door. I would see them diluting as we raise. They may be a strategic seller at some point to somebody else that wants a strategic stake, but at the moment, there's been no discussions in that regard.
David, could you talk a little bit about the processing plant that Renergen has and the $750 million they have for the expansion of that processing plant and their attitude towards D3 Energy with respect to sharing the pilot plant, which is operating now, and the stage 2 plant, which is $1 billion all-in cost?
Yeah, so Renergen's current pilot plant is about 3 million total throughput capacity per day. Ours will essentially mirror that. It's cost them quite a bit more, and they'll be the first to tell you they had challenges and they ran over budget. But putting that in context, you know, building they went the cryogenic parts, the liquid helium. Building a liquid helium cryogenic plant anywhere is difficult, let alone building it in South Africa, let alone building it during COVID, and build it with Chinese kit and contractors that had to come into country. So they had a lot of challenges. They'll be the first to tell they could have done better. We'll do much better. As far as stage 2, they're looking to expand that by a factor of 10. So they're looking to take the plant from 3 million capacity throughput per day, same sort of percentages as us, 3 to 6% helium, to 30 million standard cubic feet per day. They have a loan from Congress for US $500 million. They have loan or a line of credit from Standard Bank for about half that again. Now, that won't get them there, but I think it shows you the strategic significance of helium. And when you've got the US government, because you've got the CHIPS Act, you can't build any chips without helium. And at the moment, the US is short helium. The biggest users of helium in the world are the US and the Asian semiconductor manufacturers. So yes, Bert, there's absolutely no reason, and there's no official well, there is a dialogue, but there is no official agreement between us and Renergen next door. But obviously, if we're going to separate gaseous helium, well, do we go down the liquefaction path, or do we just ship it across to them? Because recall that tube truck that I showed from Novo? That ships natural gas. You wouldn't put helium in that for long distances because it'll leak, but you can put it in for short distances. And in miles, the Renergen cryogenic plant from us and from our field at the moment, it's about 22 miles. You could easily use even that simple piece of kit to ship gaseous helium across to Renergen. Thanks, Bert.
Thank you very much. David Casey.
Thanks, guys. Cheers.